Well, despite gold basically finishing flat on the day, it is still up more than 11% this year. And chartmaster Carter Braxton Worth sees more golden gains ahead. So, Carter, walk us through the charts.
Sure. I mean, one thing to note, look, there are three types of people when it comes to gold. You fall into one of three categories. There are people who never own it, never want to own it, never will own it. They're the opposite, people who will always own it, will never let it go, gold bugs. And then there are people who want to own it from time to time, want to hedge. The latter two are fine. I mean, obviously you don't want to have 80% of your net worth or burying this stuff in your lawn, but having a lifelong position in precious metals makes sense, and also using precious metals as a timing tool makes sense. But let's look at some charts and data and see what we can divine together. The first is just, this is an inconvenient table for the first group, people who never want to own it, can't own it, won't own it. This is, well, inconvenient. Gold and the S&P are even money going back to December 1996. They have returned the exact same. It's annualizing. You can see there at 6.8%. Now, the first response of the critic would say, well, what about total return? You just go to back to 1997. Gold has done its job on a long-term basis. You can see the chart right here. There it is. Now, one could say one's more volatile, one's less volatile. They're even money for basically 22, 23 years, and with total return about 20. So it's something to note for those who never want to talk about it or own it. Right now, that's important. This is the ratio chart, gold to the S&P. It's simply one divided by the other, and it depicts a relative strength line. This has been bottoming for the past 2 years. Gold has been outperforming equities as an asset class. Now, in terms of what's the potential, you see a long-term chart of gold here. The low, and this is the irony, of course, gold's down 200 an ounce or thereabouts. It's in the year 2000. Cisco is worth more than any company in the world, and people love .com and they hate gold. We all know how the story ends. That's why it's a great story. And then GDX. We think it has bottomed, and we're headed to around $42 a share. We closed at 34 and change today.
So gold, Carter, I know you're taking a look specifically at gold, but in terms of silver, do the charts look similar? I mean, we've seen the chart going higher as well.
Sure. Silver is a very small affair relative to gold, often called poor man's gold. That's sort of pejorative, but silver is fine if you want to own the SLV or individual equities. There are all sorts of ones that are bottoming here, and we like it a lot.
Carter, it's Karen. It's interesting when you say the S&P versus gold is almost exactly the same. Do gold bugs get disappointed when you point that out? As I was surprised when you pointed that out.
Well, I don't know. Meaning, well, I know it's the first group. People who never want to own it are sort of like, how can that be? I do all this work. I do all my DCF, and gold has kept up with the S&P since 1996. That annoys them. The gold bugs, I suppose that makes them feel quite proud.
Oh, I was wondering if it annoyed them. See all this, fiscal irresponsibility going nuts, and yet?
Oh, I see. Well, yeah, maybe they think they should have had beaten the S&P. Who's to say? But it is remarkable. And so even forgetting, with total return, gold and the S&P since basically early 1998 are even money. That's with dividends reinvested. That's a shocking thing.
That definitely surprised me. Carter, thank you. Always bring in the charts. Carter Braxton Worth of Worth Charting. Guy Adami, what do you make of that? I mean, in some ways you think, oh, well, then gold's a good bet. But then you're like, well, then just keep it in the S&P 500. If it's even money, what makes a difference?
Yeah, it is interesting, though. I would surmise that if you pulled 100 people in Times Square, nobody would have come up with the answer that Carter just gave in terms of the returns over that period of time. And listen, I get why people are reticent, and I understand what Dan is saying, but I'm telling you, if you think about what's going on globally with the moves we've seen in currencies and bonds and all the different things and all the gyrations with these central bankers, gold's going to win to this, and it's on the verge of breaking out. And quickly about silver, since you brought it up, Melms, gold's within a whisper of its all-time high. Silver's still about 50% below its all-time high. So silver's got some catching up to do, as they say. And the right way to play this, I believe, and I think Dan alluded to it, is through the PHYS, something that Danny Moses talks about. And we are right up against the level we last saw, I think, in the summer of 2011-ish.
What did you say? PHYS? Oh, spot physical gold. Got it.
That's what I said.
Yeah.
That's what I said. PHYS.